Greetings, Dr. Jeffrey Scott here. This is my weekend market update for the weekend of February 4th, 2023. My email address is hgsidoc@gmail.com. I'm happy to respond to comments or questions via email or put them under the remarks on YouTube. Speaking of YouTube, if you're new to my site, please hit the subscribe button and hit the alarm, and you'll get notification when I post these. All over the place on timing, depending upon what's going on in my life. I do this for passion, not really for a business. I titled today, Higher for Longer, Fed Disappoints the Bulls. Disclaimer, this is for education. Anything I talk about, any recommendation should be taken in the spirit of education and not investment advice. I'm a doctor, not a broker. I'm independent of any software vendor or trading company, and I pay for the tools that I use, and trading involves risk, and you are solely responsible for any investment decisions you make. If you like these videos and you'd like to hear more of them, you could go to stocksanddocs.com. Monday through Friday, I try and put a shorter video before the market opens just to give you a sense of what I'm looking at that day. Major markets tell the story. You could see, except for the Russell, which was down a little bit, 0.8% on Friday, on the 5 days, and 0.5 on Friday. The major markets were mostly up on the week, led by, well, you can see the FANGs really knocked out of the park, 4.4. And interesting, the small cap growth IBD 50 ETF was up 3.9 on the week. But beyond that, the NASDAQ 1.2, S&P 1.4, Dow 1.4, NYSE 0.9. It was a broad-based rally. And you could see that especially on the FANG, most of their rally, all the rally came in on Friday after knockout earnings by Amazon and Meta platforms. On the week, you could see the only areas that were down were real estate and energy. If we look at the Q Edge tool, we could see we're at a 50-50 market, neither bullish or bearish by buckets. But you can see on Friday, despite the fact the indices finished quite well, the markets were not. 82% of the sectors were down on Friday, 69% of the industry groups, and 62% of the stocks. If you look at over a month, 10 days, 5 days, 2 and 1 days, you could see we've clearly weakened as we look at 5 days versus 10 days, as the markets have burned off some of the exuberance they might have been seeing. The other concern I've had has been these skull and crossbones, which are the Hindenburg Omens. Now, this is a composite index. It's not the classical NYSE. It's a combination of the NYSE and the NASDAQ. And you could see the last time we got these, here was one, a little sell-off. Here's when it was confirmed, a deeper sell-off. That we've got a confirmed Hindenburg Omen, which often leads to a topping move. Doesn't mean you're going to have a big sell-off, but 1 out of 4 can be significant. This here at Blue Area is Bango, and that was on Monday when the market had a really exuberant session, and that's sort of a measurement of irrational exuberance. Here is the Nick Drendel tool. It shows you on Friday that large cap, the Russell, the IWO was down, but the ARKK small cap growth was up. Qs, spiders, and really the part of the market that was down was regional banks. If you look here on the 1-day change, you can see that internet, semis, consumer discretionary led the way, and financials weakened, and probably because, as we'll talk about, New York Community Bank came out with some comments about their commercial loan portfolio, and they cut their dividend, which no one likes to see. Rates eased in white on the 10-year and the 30-year on the week, while markets went higher in yellow. I'll always put this here. I'm waiting to see an inversion because it's the re-inversion or the normalization of the 10-2 and 10-3 yield curve, which usually signifies the time to start worrying about a recession. We've not done that yet. We've not seen credit tightness, and the economy is holding above -20 on the Philadelphia Fed Diffusion Index, which is above the area where recessions start. I don't know if I'd say it's bad breath, but weekend breadth. You can see stocks above the 200, stocks above the 40, and my 23, the 13-week T2121 new high, new low, all weakened as the markets, went in the markets that are highs and the breadth has eased off the highs. Current buckets, again, a 50-50 market. Half the stocks in the S&P 1500 are above the midline of their Bollinger Bands. When I look at the NASDAQ and the NYSE, and I look at the elements of a Hindenburg Omen, you could see the NASDAQ, which is not the classic index that we look at, has had multiple Hindies and confirmed Hindies, while there's only been one unconfirmed on the NYSE. So if you're holding on to that bullish posture, the market's going to go to the moon. That's your defense against the Hindenburg Omen. And you'll notice that the issue of new lows is a problem for the NASDAQ, not the NYSE. Now, this is a tool that takes the market response from the 5 days, from starting end of day Friday to end of day Friday, and looks at how the market responded based upon the ERG of an individual stock. And ERG is a combination of EPS rank plus relative strength rank plus group rank. And what this shows is as ERG went up, performance went up. There are very few stocks at the heads or the tails, so I usually ignore them. I'm a growth stock investor, and therefore high ERG is good for me. And you could see high relative strength stocks outperformed, and for the most part, those with earnings outperformed those with low EPS ranks. When you look at a large number of groups of stocks heavily geared towards growth, you could see there's much more black or leading groups than red, and you could see the IBD 50 up 3.84. The IBD 8585, which is their weekend review, up 3.6. The leading 8 stocks up 5%. That this was a weak Market Smith 250 up 2.39, where IBD type stocks with growth were rewarded. Know your news and earnings. We come out of the blackout for the Fed speakers. And because of that, we get a ton of this week, as you can see listed here. We've got some more employment on Thursday. And I think the employment numbers kind of spooked the market on Friday, the monthly unemployment report, much stronger than expected. Now, a week ago, the Fed commented that they were going to pay more attention to inflation rate necessarily than issues around the economy, which was resilient, and the employment situation. But clearly, on the strong employment, you saw a big snapback down of the futures. Fortunately, they were going in the face of really strong earnings, and by the end of the day, the market did turn around. If we look at earnings as another massive week of earnings to be aware of. It is a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts, busy week last week of news and earnings. S&P 500, Dow Jones at all-time highs on Friday. All log gains on the week except for the Russell. Small caps underperformed. I mentioned the regional banks, New York Community Bank provisions for credit losses in the fourth quarter were massive compared to the prior three, primarily attributed to higher net charge-offs and weakness in the office sector, and repricing risk in the multifamily portfolio. So the S&P regional ETF carry was down 7.2% on the week. Mega cap stocks outperformed the broader market. Google and Microsoft lagged a little bit after their earnings were underappreciated, while Apple, AMZN and META reported on Thursday, and at least META had a massive gain, 20%, and Amazon was up 8%. Markets still feel toppy to me. We've seen some parabolic moves post earnings. Look at SMCI, Meta, among others. While some have dropped, the Google, the Microsoft, the presence of so many Hindenburg Omen signals remains a concern, yet the resilience of these markets is palpable. I continue to approach the markets with a bias to the long side. However, I'm still carrying a fair amount of cash, and considering the potential risk, I am in zero margin. I will take selected shorts in this market, selected longs, and I have sold some calls against some of my longer term positions. Let's go take a look at the charts. We'll start looking at the S&P 500 5-minute charts. You could see after some weakness the prior Friday, we opened up on Monday strong and traded sideways and then closed much higher on the session. Tuesday, a sideways move. Wednesday, we had the Fed and Powell who disappointed, and you could see that we gapped down because of the earnings probably Tuesday night, traded up to where we opened, and then the Fed minutes came out and the market sold off with Powell speaking. Interestingly, we opened Thursday, traded lower, and then traded higher into the close, and then juiced by really strong earnings. We had a really strong day on Friday, and this is about the time that the NYCB Bank came out with their warning. So a couple things to notice is the daily bongo on the this is the 5-minute, actually switched back to green after going red on the Fed-induced sell-off. If we look at the major markets, we will see on the daily charts, the S&P 500 closed just off the highs. This is a fresh all-time high. The Qs are close to an all-time high. They finished a little weaker, a little off the highs, not weaker. The Qs were up 1.69. The S&P was up 1%, and the Dow had a strong session, although was only up 0.34. You could see closing just off the high of the day, sort of the theme of each of those indices. The Russell traded again down to the 50 and bounced, and let's just hope that that remains support right now. You'd expect the VIX to not have done much on a strong week, and the VIX was down on the week, 3.48%. If you want to find concerning things, oil popped up, still below the falling 50, which is good, but it was up almost 1% on Friday. Going to look at commodities, and let's link it to my Tasty Trade account so we can get that data. With the dollar strengthening, gold and silver were down. Oil has weakened. Natural gas is doing nothing. And then 10-year, and this probably did not help things like biotech. The small cap biotech seem to be very closely aligned with what the 10-year does. And you could see that the 10-year was up significantly, 4.4%, and I believe it regained 4% on the rates. So that's something to watch. Now, for the bulls, the dollar and the 10-year are both way off the recent highs, and frankly, they haven't broken above their moving averages. If we look at the weekly market timing, I could have gone here first, but you could see we are above the moving average, and we have green bongos on each of the spiders, Qs and diamonds and Russell. So all of them are in a buy. If I look at the daily timing, you could see that, interestingly, the Qs and the Russell are both still with a daily bongo that's red. The others are green. Everybody is above their WMA except for the Russell, which technically, the way I look at it, the Russell's actually in a sell. Now, I don't put as much credence on, let's see, let me get what I want. Free, did they change this? I think they may have freehand text, shapes, objects. I don't put as much credence on daily signals as I do the weekly, but when I see a daily sell and a weekly buy, it just tells me the market's not very strong. It doesn't tell me I have to end everything. It tells me I might be careful in what I add. It tells me to start shrinking my margin, which I've eliminated. If I look at the S&P sectors hourly to get a sense of what was working at the end of the session, You could see that communications, which started the week strong, ended the week strong with some drop in the middle. Let's just move that up. So let me just see if I can move this out of the way. Perfect. All right, so they finished much stronger. Okay. Materials are still weak. Energy's weak. Financials, which flirted, really fell down with that NYCB. Industrials, not really. Technology is weakened. These are all compared to the spider. Staples, which was flirting, came down. Real estate down. Utilities down. Interestingly, we're seeing a little bit of a bump here in discretionary. XLV came down versus the spider. LABU is kind of flat. So if you're looking for strength, man, the only strength I'm seeing relative to the spider is XLC. Kind of disappointing. These are all hourly charts. And what I'm looking for are things that are pointing up to the upper right hand corner or things that have a long blue bar or red bar at the end. So discretionary actually ticked up some, which is interesting considering um, some of the concerns in the market. Maybe it's got to do with the exuberance coming in. It probably has a lot to do with Amazon and META. If I go into the stock scanners and I start with the heat map and we look at end of day Friday, strong day for everybody except for the Russell. You could see how strong the S&P is. And out of curiosity, if we just take a look at the Russell 2000, it looks totally different. If I jump into Wealth Scanner and I want to see what market ETFs are leading and what the numbers look like, remember you can get 860s at the top in a strong market. In a strong market, nothing is below 800 on this list. And the only thing above 800 is a short duration bond. Now, if bonds followed by dividend growth, then the diamonds, bonds, covered calls, here's XLV, staples, industrials, uranium. When you see bonds up at the top, it's never good. And most of the others, especially things that are growth related, have weakened some from at the industry group level. If I go into my CAT scanner, I might want to look at communications and see if anything here is popping up as potential buying areas. And I look for my dots and I see 4 dots on Pinterest. And this is one that I thought did look interesting. A run up, sort of a cup and a handle with a breakout. You've got volume and a gap, a breakout momentum. You just came out of a squeeze. Relative strength and OBV looks strong. Not extended. And this is probably getting some advantage from what we saw with Meta. Um, but unlike Meta, which has a high jump of 100%, Pinterest is still buyable. Snowflake was another one that looked interesting. Look, I'm a doctor, although I have a tech company. I'm not the expert on all the different tech companies from a what they do perspective. But what I could tell you is I spent a lot of money, we spent a lot of money of our company to implement a Snowflake program. And it has to do with data sharing that we do between us and other parties. And every major payer, pharma company, um, technology platform seems to have implemented Snowflake. When this first came out, this was a super hot IPO. It sold off, which was probably um, hurt it for a long time. You could see. Let's go to a monthly chart here instead of weekly. Sometimes you got to be careful what you wish for. So you had prices after the IPO in the 400s, and it took a long time for this to come back. But this one looks really interesting to me. A breakout from this area of congestion on great volume with a gap closing at the high, so sort of like a Morales spyable gap up. Volume, breakout momentum, Bangos turn green, relative strength in OBV. Now it's reading as being extended, so you can certainly see that on the weekly. I just like this one here. JFrog is another one that looked interesting. High base, sideways move, and then what happened on Friday, a big volume, breakout momentum. Weekly bongo turned green, not extended, relative strength in OBV looked good. I don't know what KT is, but let's take a look at it. Don't like the shooting star there. Looks like an ADR, doesn't it? It is. And then another one I did like is XP. Similar to all the others, run up, sideways move, and this is closing right up with a close back here. Breakout of momentum, recent pullback with the bongos, relative strength and OBV look good, not extended. So right there, just looking at communications, which is the strength in this market, a number of stocks that look attractive come right to the top. Now, if I pull the combo IBD list up, which is or not IBD, it's combo leaders list. It includes some of the IBD lists that I combine with a number of other lists. And I look to see what comes to the top there. Amazon, which fortunately I already own some, I hope you all own some, had a big gap up on earnings, lots of volume, breakout momentum, rel strength and OBV. It's kind of hard to buy Amazon right here, but its numbers were great, up on the session about 8%, 7.87. But it's extended. LPL Financial, so my money is with an LPL, um, coming out of a sort of a rounded base with a pullback, almost a cup and handle breakout, but it's extended. Meta, very extended, but man, what a day. A stock that started the day close to 400, having a 20% move, to me is almost unheard of. Then we get Pinterest stars, American Eagle Outfitters. I think my favorite retail apparel stock has been Abercrombie and Fitch. Tight rocket ship. Hard to know when you can buy this thing. It's been extended for a long time. You'd like to buy it when it pulls back. But also looking good here is American Eagle Outfitters. As we can see here, it's pulled back, broke out above the 17, took out the highs, closing highs all the way back to here. Volume breakout momentum from the squeeze. Good picture on the bongos. Relative strength almost there. OBV is good and not extended. I like that one. App Lovin. It's kind of going sideways here, but big volume, breakout momentum, relative strength and OBV. If it takes out this dotted line, which is the close, maybe up to the high of this bar here, which was 46.59. It closed at 45.86. A takeout of this bar takes out all the highs to the left and would be very interesting. This is App Lovin. There's Frog. MDB, if I were a lot of traditional technology plays, I think this is application software. Run, sideways move, and look at this, a wealth signal, an EMS, a breakout on big volume with momentum, not extended, relative strength and OBV. Elasticity is another one that I've been playing off and on that looks like after a sideways consolidation, perhaps it's getting ready to run again. An EMS, volume and a breakout, relative strength and OBV look good. So, the interesting thing is, despite the macro where I'm concerned because of the Hindenburg, despite the fact that you've got some very extended tech stocks, there's certainly some nice looking charts left to look at. The NU is a banking stock that behaves more like a growth stock. It's been in a big move up, and it had a recent pullback on the bongos. Relative strength and OB look good. A breakout momentum from a squeeze. I like that one as well. So many interesting stocks. I think we looked at XP when we looked at the communications. So I think I'm going to make this a short video as I'm on the road. I hope this audio is better than using the internal. I actually bought a pair of headset to take with me on the road. You all have an awesome week. Probably won't be a video Monday morning, but there will be one Tuesday when I come home to my family. Thanks, everybody. See you later.